Hello friends, you're watching Tax Dosti videos, and there has been an increasing request for discussion of value added tax in the United Arab Emirates UAE, since we have been discussing corporate tax CT that has been implemented in UAE. So we'll be taking an example today, and that example relates to the supply of real estate in United Arab Emirates. Is the supply of real estate taxable under VAT? Yes. When you sell and buy property in the United Arab Emirates, then you have to charge uh, sales tax, or what is known as value added tax, VAT, in United Arab Emirates. So how can that be? Because many people are of the understanding that okay, when we sell goods and services as a business, we will charge VAT. But many people sell investment as a sell property as an investment. So what are the different rules and regulations? For this, we'll be using this very helpful blog page of Tally. Tally is accounting software, and this has been updated on December 30th, 2021. So beware that this video is only for information and general awareness. It is highly recommended that you discuss your specific case with an expert in VAT laws. We can also help. The number is given below. But in this video, we'll explain the general concept. Now, when we say the supply of real estate, so that may not be clear to many people. By supply, the VAT law of UAE means that when real estate property is sold, is leased out, or given on rent, then how will the VAT be calculated, what rate will be charged, and what will be the different circumstances under which VAT will be levied. So, to start with, what is VAT rate applicable to different types of supplies? So, as you saw, that you can lease your property, you can sell it, you can make it into car parking, hotel, then there is residential building, charity building. So let's see. If you lease out or sell your commercial property, then you have to charge VAT at the rate of 5%. And let me first complete with these tax laws, then I'll answer whether a person selling commercial property or a person selling residential building should be registered with VAT or not. So, lease or sale of commercial property, then car parking and hotels. If you have car parking, sell and hotels, you sell real estate relating to car parking and hotels, you have to charge standard rate of 5%. If you sell supply, actually we all call it sales, but the law calls it supply. If you supply a residential building within 3 years of its completion, that means that if you make a residential property as a builder, or if you buy that property that has been built, then 0% tax will be charged if it's sold in the first 3 years. Similarly, for charity related buildings. And then there are exempt supplies. Subsequently, when residential buildings are sold, when one buyer, the first buyer, sells to the second buyer, because residential as well as commercial properties are made by builders in UAE, they sell to the buyers through agents. Now, after the first sale, the second supply of residential building will not be zero rated, it will be exempt supplies and including bare land. So, many looking at these tax rate, many questions may have come to your mind. Let's see how many we can answer through these very well designed FAQs. So, does a person owning real estate need to register for VAT? Meaning that if you own a residential building, as it says here. Owning real need. The answer is the owner of residential buildings do not have to register under VAT if they do not have any other business activity. Where owners have other business activities, they should check whether their turnover exceeds the threshold limit for registration, and that threshold limit is 3,75,000 dirhams of sale value per year or in the next 12 months. So, residential building owners have been given this cushion that they do not have to register if they don't have any other business activity. Note that here owning residential building has been taken in the sense of holding stock. If you hold one or two residential buildings and you sell them infrequently, so maybe you don't have to register under VAT even if you have other businesses. But the owner of any building that is not residential will have to register if the value of supplies over the preceding previous 12 months exceed 3,75,000 dirhams over the coming 30 days. So, other than residential buildings, if you own residential buildings, then you may not have to register with VAT. Then again, this is for just for general information. But if you own buildings other than residential, then you have to register if your sales, and definitely real estate is expensive, so this limit will automatically be made. You'll reach this limit as soon as you sell even a few properties. So this was relating to registration, because the tax can only be charged by a registered person. If you are not required to be registered, then you don't have to charge this tax at 0 rate or 5% or exempt. So this is very important that you understand that registration is for people who are doing this as a business. What constitutes a business? That's a technical and legal question that will be answered by your tax consultants. But important thing is, to register, you need to do this as a business. Then you will have to register with VAT. And important thing is that not only selling of goods, but even providing of services is taxable, because this question says, will VAT be charged to a tenant on a property she is renting in UAE? The answer is the rent of residential building will be generally be exempt from VAT. The rent will not include any amount of tax. Being exempt means that they have to register, but they do not have to charge any tax. The rent of commercial building will be subject to VAT at 5%, meaning that if you are the owner of a commercial building and you rent out that building, then you will it's your sale of services or supply of services, and you have to charge 5% VAT on top of your gross rent for commercial buildings. For residential buildings, you will have to register with VAT, and you'll have to charge no VAT on it. It is exempt from, but you have to register, and you have to issue an invoice, VAT invoice, which will say that it is exempt, and you will not be able to, residential building person will not be able to claim input tax. So I hope that these few questions gave you a flavor of the topic. Now we'll continue with these questions. Question number 2 is residential property subject to VAT in UAE? So it's important to know that the first supply of a new residential building within first 3 years of it being constructed will be 0 rated, meaning that you will issue a VAT invoice, and the rate at which you will charge VAT will be 0. So basically the sale value will be the amount of consideration that you will receive from your buyer, and as a seller you will have to register with VAT, because only VAT registered people can uh, issue an invoice. So there comes two situations. One is that if you have not met this limit of 3,75,000 dirhams in the previous 12 months, then you don't have to register and you can just issue a commercial invoice. And the other thing is that when you are selling a residential building or residential property, and it is only once or twice in a year, or it's infrequent, meaning that you this is not your main business or this is not your livelihood, but it is just that you have some spare building or you get a um, good option, so you're selling it as an investment. So then you may not have to register with uh, the FTA as a registered VAT person. And if you register, then you'll be issuing a zero rated invoice in case of residential building, and only zero rated for the first time sale of it, and that too within 3 years. After that, if you sell it, it will be exempt. All subsequent supplies of residential property, even if they are made within the first 3 years of its being constructed, they will be uh, uh, considered as exempt supplies. Now, exempt supplies also means that when the question arises of registering with the Federal Tax Authority in UAE, so for registration there is only one rule, that if you reach the point of 3,75,000 dirhams in the previous 12 months, then you will have to register in the next 30 days, or if you get a notice, you have to register in 10 days. Now, exempt supplies and non taxable supplies are not included in this amount. So, even if you are selling residential property of millions of rupees and it is subsequent, it will be exempt supplies and it will not be counted towards your target. It is only taxable supplies, that once you sell taxable supplies. So, residential property, if you sell residential property as a builder developer, you will charge 0% on its first sale. Now, the same property you sell it as a buyer, now you're selling it for the second time to somebody else. So, even then, you don't have to register with you may not have to register with the uh, VAT authorities, the FTA authorities, because since this is not this is exempt supplies, so will not be counted towards the turnover limit of 3,75,000. And so residential property, even if you're doing it as a business, you don't have to register with the FTA if it's done in this way. On the other hand, commercial real estate is subject to VAT. All supplies of commercial properties are subject to VAT at the rate of 5%. So, definitely, when you are dealing in commercial properties, then you may have to consider that if you are reaching that limit, or what uh, what kind of business you are doing. Either you are a trader of property, or you are a builder developer, first time sale, or you're making subsequent sales. So, as a commercial property business person, you have to register at some point, and that may be if you're in your first sale, as well as if you are a trader and you're keeping these as stock. So, in your second, third sale, you may reach the amount of 3,75,000, and then you have to register and charge 5% of VAT. Can a real estate owner recover VAT paid in relationship to real estate? So the question is basically asking that all this talk of registration, is there any benefit? Yes. If you are a builder, developer, or a trader of properties, then definitely when you buy raw material, there will be, since that those are also businesses and supply of goods and even supply of services, so a lot of VAT will be charged alongside the sale price of your raw material, your services, or contract. So all of that you can claim against the your selling price. Since you will be adding value, that's why it's called value added tax. Since you'll be adding value, so you will obviously be increasing the price, and you will be the 5% that you apply, there will be a difference. For example, if you paid 5% on 100 rupees of raw material and services, now you'll definitely be selling the property for 200 rupees, and the VAT you'll get will be 10 rupees or 10 dirhams, and you'll subtract the input which you have already paid 5 dirhams on 100 dirhams, and you will the rest you will pay through the Amar tax system online to the Federal Tax Authority. So for residential and commercial, there are separate rules, because exempt supplies means that you cannot claim input for these supplies. That means the traders or the property dealers or people who are the subsequent second, third, and fourth buyers, they cannot, if they are charged at the time of purchase of any input, for example, if they are buying property from a first time buyer or second time buyer, maybe they pay commission, and the person charging commission will also be charging them with VAT. So that VAT will be input tax for them, but when they sell the property, it is exempt supplies, and they will not be able to adjust this 5%. So it will be in their cost, included in the cost of their purchase of that property. So 5% will be added. So in this way, there is a difference of commercial. When commercial property is sold, even if it's second buyer, third buyer, fourth buyer, or seller, they can adjust the input tax that is being charged to them. An owner of commercial building will generally be able to recover VAT in respect of expenses related to the supply of building, as it is a taxable supply. So it's a taxable supply. Next is, how is a mixed use? Now then, there can be buildings which are residential as well as commercial. So the how will they be treated for VAT? So there will be a bifurcation or division, meaning the rent or sale of residential part of the building will be treated as zero rated or exempt, depending on whether it is the first supply or the subsequent supply. If it's subsequent supply, it will be treated as exempt supplies. The rent or sale of commercial part of the building will be treated as subject to VAT at the rate of 5%, even if it's first supply or subsequent supplies. So this is how real estate will be taxed under VAT. I hope that you had a basic understanding, because this is for just for introduction and an awareness. We use the telesolutions.com website, their blog, for this very helpful information, and hopefully we'll be discussing more scenarios as you move on. The most important thing you have to understand is the VAT law applies to all goods and services sold within the GCC region, including UAE, Saudi Arabia, and there are different rates of VAT in different jurisdictions, but normally everything comes under VAT. If it's specially exempted, as you saw, residential property was declared as exempt supplies, and some are declared as zero rated supplies. Other than that, all goods and services, whenever you sell them as a business, as a registered person with FTA, you'll have to charge 5% VAT. Thank you very much. See you in the next video.